that we have a week the way that we had them and they're very profitable, I'm definitely excited. You know, that definitely gets me excited. And so definitely looking forward to this call here with you all this evening. So who do we have on the line? Let's see. Who do we have? I see we have Jacksonville. Jacksonville, good evening. Good evening, North Carolina. Good evening. Good evening. I see we have Pittsburgh, Minnesota, Toledo, Milwaukee, New York. Good evening, Minnesota. Tavares, good evening. Good evening. I see somebody's just like, look, I'm cutting straight to the point. I'm a master trader, right? Or as you leave something out. So Moultrie, good evening, Columbia. I see we have Claremont, good eve, Cleveland, Sacramento, California, Chicago, Jacksonville. Okay, Jacksonville, Baltimore, Columbus, Nashville, good evening, California, Virginia. You guys go ahead and drop it in the chat where you're calling in from as you log on. There are so many more of you all on this line that we actually have that are dropping it in the chat. So you definitely want to do that. So, and no, I'm not going to scream Duval. This is not my home. I just happen to reside here right now. So, but okay, awesome. I see you guys. There we go. BYOB worldwide, all around from everywhere. I love it. All right, so let's just go ahead and dive in. Now, where we're going to begin and where we always want to start is we want to always start with those affirmations, guys. So those affirmations, I'm a BYOB master trader. I am the signal. All my trades end in profit. I am 777. Now, for those of you all who are new with us, that 777 simply means that you're in profit. If you look in our Telegram chat, you in our Telegram chat, it definitely tells you, you see 777 all the time. And what that means is that someone actually made a withdrawal from the market. That's what that means. And so when you know that, and we also, you know, so for those of you all who are not in our Telegram chat, I want to make sure that you guys go ahead and join. So is be your own bank, BYOB cash out. You can definitely find that, you know, you can definitely, all right, I see Panama as well, BYOB worldwide. So, but you can definitely see that as well in the chat. So on Telegram, for those of you who are not in the chat, you know, on Telegram, you definitely want to make sure that you know, you drop that in there. So we're about to get started here this evening. And as we get started, if this is your first time here with us, you know, your first time, let me get a 111 in the chat. Let me get a 111 if this is your first time joining us this evening. And if you're still learning how to cash out, let me get a 222. All right, let me get a 222 in the chat. All right, so let me see here. All right, I see you as well. I see you. So, all right, so I got you all. I'm just getting all this stuff set up so we can go ahead and get started here. And I'm actually going to go ahead and share my screen. And so let me officially welcome each and every last one of you. I see we have some 111s, some 222s. So this just means that this is your first time with us this evening. So the first time here with us this evening. So what I'm going to do is I'm going to go ahead and share my screen. But as I do that, I'm going to let you know exactly what we do and how we do it. So this is Market Talks. All right. Market Talks means that you know, we are educating. What we believe in with BYOB, what our ultimate goal and our purpose is to make sure that you are educated. Educated trader is a profitable trader. There are so many individuals that want to teach how to trade and want to be a part of this market, but you see, you have to make the commitment to yourself that you're ready to learn a skill set. You have to make the commitment to yourself that you want it. If you want it, then it's important for you to be educated. Everything we've done since the time we were children has always been an emphasis on education. And so when we understand that, and we know that education is so ultimately important, then we focus on that education. And so when you say, I am a BYOB master trader, that's because you are an educated trader. An educated trader is a profitable trader. So when you say, I am the signal, that means that you are developing and you have that relationship with the market to where you really, really can grasp and understand what's happening in the market. Okay, you have that and you understand that. So in all my trades in profit, let me help you. There has to be an expectation that you're a winner. There has to be an expectation that you're going to be successful. There has to be an expectation. And so when you go to work, let me help you understand the same mindset that you do anything else. Because when you go to work, you expect the paycheck. So now that you've taken this into your own hands and you've made a decision that you're going to create your value, then there has to be an expectation. So this is why it's important for us to walk this out on purpose. It's important for us to spell this out. It's important for us to speak this because we're speaking with expectancy and we're learning this skill set. So as we dive in right here, now what we're training on tonight, so you all know in the morning on our profit calls, we take the education that we learned tonight and then we implement that in the morning calls, right? That's what we do. We take what we learned tonight and then we implement it in the morning. And that's what we do on a profit call. So tonight we're going to have a focus on the alerts from the Vibrata. We've been using them and we've definitely been using them and we've talked about the lower time frame, but we often talk about ensuring that you understand the market in its totality, understanding the big picture of the market. And so I want to focus on the alerts on a higher time frame as we talk about the market tonight. And so where we're going to start and where these alerts come from is the Vibrata. Now, some of you all, as you can see, this is not the one in IM.Center, and that's okay. They are the same tool. It's the exact same thing. So I actually just go to this website, IMWebanalyzer.com, and this is where I pull it up. Now, one thing to understand, I'm gonna play something for you all right now because our visionary is a spokesperson for this tool. And understanding that he's a spokesperson for this tool, I want you to understand the magnitude and the power of what you have in your hands, all right? I really, really want you to understand that because it's very comparable to what the big banks of the world utilize. And he actually has a background in investment banking. So what I'm gonna do right now is I'm gonna just go ahead and play this clip so we can go ahead and dive into training tonight.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking, lending, and when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be your partner to empower you economically, financially, and leave a true legacy.
All right, so I just really wanted you all to understand the power and the magnitude of what we have. So as we dive in, this evening, where we're going to start is the strategy itself. No matter what we're trading, no matter where we go, no matter what's happening, we need to understand the BYOB cash out strategy. And for those of you all, we have quite a few individuals on here for the first time. So I really want to break this down and help you guys understand the strategy. But I also want you to know that it was back tested for a year. We back tested it on every currency pair, the Forex market, commodities, indices, crypto. It was back tested on everything. And it came back with a 92% accuracy rate. And so that was the lowest accuracy rate. And so that's why we always say 92. So that means some of them were actually higher. So when you understand that, and you understand the magnitude and the power, now it's just really about the implementation and you focusing in on the skill set. That's ultimately what this is about. And so, you know, as we look at this, as we go through this, if you have any questions, comments, testimonies, you know, go ahead and drop it in the chat. When you drop it in the chat, we're definitely going to, I'm going to address it. So I want to make sure that you all understand the strategy, and then we'll definitely dive in a little bit deeper, okay? And the thing about this is we always trade based on our trading style, all right? We trade based on our trading style. So each one of you are going to have a different trading style. So it's very important. And before I say that, what's very important, when I say trading style, that means some of you are going to be swing traders. It means you like to set the trade, walk away from it, and just let it manifest. Some of you are going to be intraday, you know, a few pips, 30, 40 pips, 50 pips, and walk away. And then of other ones, you're going to be scalpers, which means you're 10 pips in and out of the market. And then of course we have our HFX. Also, for those of you all, that's options trading. And so of course that's on our YouTube channel as well, where you can go watch where we broke that down for you. You want to go ahead and dive in and master that. So, and if you're a scalper, you'll probably love options HFX. So now, but the strategy comes at the foundation, okay? And what you're looking at is a currency pair, and the strategy comes at the foundation. So understanding that we come at the foundation is, you see we're on a 15-minute chart. You see right there where I have it highlighted? This is actually the 15-minute chart. And so what happens is, I don't want you to stay here though. I'm gonna give you the foundation, but a foundation is important to build upon. A foundation is important for you to, you know, is for you to grow from. But the reality is of the foundation here on a 15-minute chart, no matter where you are and where you come from in your first, you know, in your first 14 to 21 days, you can definitely begin to understand and you can begin to see how to navigate the market, but you have to make the commitment for yourself to put the time in to learn this. All right. So I'm telling you, and it's happened, and it's even happened faster than that for some people. So I make no guarantees, because the guarantee is on you, right? You are the one, you are the common denominator in your success. So here we have it. Now, the stochastic, this strategy, BYOB cash out, is indicator based, but these indicators are price action with a twist. So I'm not one that likes a lot of indicators. I'm not one that likes a chart full, like, you know, where you have so much stuff on the chart, but this gives price action that twist to push you in the right direction. And so right here where you have the stochastic, now understand that we're running from the 20 to the 80, okay? We're running from the 20 to the 80. And now when I'm here, this is the 20, this is the 80. So my stochastic is a leading indicator, and this is a momentum indicator, okay? It's a leading indicator that is a momentum indicator. And then of course, you know, we have our Hikinashi candles, and our Hikinashi candles, these are trend candles, okay? And the trend is your friend, right? So you notice that these are Japanese candles. These are traditional Japanese candles. So this means that these are a lagging indicator, because they're calculated based off of highs, lows, open, close of previous candles. So they're a lagging indicator, but they also predict and really help you understand the trend of the market. And then we have our PSAR, which are these dots. So this PSAR is that parabolic stop and reversal. And so this is actually the dots so that you see. And so this is really like a trailing stop loss that moves with the market. We have to have that. So we understand support and resistance lines. So this is what you would really call like a dynamic support and resistance line, meaning that it's running with it. So our support and resistance lines are never, you know, they go like this, you know, they're the lines that we see in the charts, you know, but so these are not those typical lines, they're not flowing with this. So this is something that you would really consider like a dynamic support and resistance. And so that's really what you're seeing right there with those. Now, that's it, that's our indicators. And so what we're doing is, because this is my leading indicator, that means it comes first, right? Human nature means I look at this chart and the first thing I see is a red candle. I see a red candle. So, but, I want you to get in the habit of also, even though you see that I'm not telling you you can't look at it, but I want you to get in the habit of understanding where my momentum is, because this is a momentum indicator. Now, right here, we're going to use this one because it's a nice smooth trade. So blue line crossed over the red and the downward momentum right here. All right. And you notice that when I say a momentum indicator, all right, let me show you right here. When I say a momentum indicator, okay, you notice that where this actually crossed, so you could really say it crossed over, it was starting around here. So this is actually a really good one. I'm gonna make it bigger so you can see it. This is actually a good one because we actually have a red candle here. Sometimes it doesn't begin manifesting that fast, right? So it doesn't happen that fast, but this one did. And that's good. But remember, we can't control the market. We don't know when it's gonna happen. You ride the wave, right? So now, even though it crossed right here, and even though I have a red candle with a flat top, what I do not have is a PSR flip. So when I say PSR flip, you notice the dots are on the top, then they flip to the bottom. They're at the bottom, then they flip to the top. You notice how they're rolling with the trend of the market, how they're, is selling. So they're at the top, then you come here, they're buying and they're at the bottom. So it flipped to the bottom. So this is really like that momentum when it actually pushes through and it crosses through a support and resistance line. And so just imagine this trailing support and resistance, right? The one that flows with me flips to push it through the standard, right? The ones that we always are looking for. That's the strategy right there. That's the BYOB cash out strategy. Now, I'm going to walk you to time frame confluence, but I want to address your stop loss because for whatever reason, I will forget if I don't do it now. So right here, your stop loss always goes above the PSR for a sell, or it goes below the PSR for a buy. So what it's doing is it's taking the guesswork out. It's taking the guesswork out of you trying to figure out how many pips my stop loss should be, where should I put it? The market is telling you where your stop loss goes. The market is giving you, hey, guys, to mind your mic, mind your mics, mind your mics. Thank you. All right. So
This
let's
was some of the stuff. Look at
etiquette. Let's make sure we have some Zoom etiquette. Thank you. All right. So I need everybody to pay attention to go ahead and check your mics and make sure that you do not unmute your mics. Thank you so much. So matter of fact, let me do this. Got it. There we go. So now, so that in itself, right? That in itself is, where we have the BYOB cash out strategy. And of course, your stop loss will go above or your stop loss will go below. All right. Your stop loss goes above or your stop loss goes below. Now, how far below? That's completely up to you. That's where your personal risk management comes in. But you just do not put it on this, all right? You don't put it on it. The same thought process and concept as to why we don't put it on our support and resistance lines, all right? So now what I'm gonna do is I'm gonna grab this arrow. I'm gonna put this arrow right here because what we're about to do now is what we call time frame confluence. So what, how you doing, Seattle? Welcome. So what time frame confluence is where we, remember my higher time frame tells me what the market is doing, and my lower time frame is the activity and the entry points. So I want to check my higher time frame, okay? I want to check my higher time frame. Now, when I check my higher time frame, okay, you notice that, right? See here, I check my higher time frame, and you notice that this is a really good one. So sometimes we don't have all of that, but one thing I want to point out is you want to make sure that you have your momentum, which you see right here, my momentum is flowing down. And also I have a red candle. Now we don't always have this. You guys know that. We don't always have the PSR, the flat top, because a lot of times we have to wait. This one actually happened to manifest. This one actually happened to begin right here. And then of course I want to drop down to my 5 minute. My 5 minute needs to still be selling. Now remember, my lower time frames are my activity. You'll see all the activity in the market, and my lower time frames is where I can get my entry point, right? That's what you're seeing there. And so with all of that now, from a foundational standpoint, this is where you'll enter the trade. You do your 10 pips and cash out, all right? 10 pips and cash out, or take it to the first support and resistance line. Now, this one is not the first one because this is really right where we entered the market. So your first support and resistance line is actually right here, down here. All right, so that's actually right where you see that marked up right there. So because yes, technically you have one right here, but you notice that this is really what we got in the market, and we're right here at this first candle. So this is technically my first one. So right here, you know, your 10 pips and cash out, trust me, 10 pips can do a lot as you grow your lot size. So if you learn how to compound, you know, on our website, Be Your Own Bank Movement, the compounding sheet is on the website. So if you learn how to compound, we compound out all the time. You compound out for your house, you compound for your mortgage, you compound out when you buy a car, you compound out when you do your interest rates. For your credit cards, you compound out all the time. It's time to make that shift in your mindset and understand that we deserve to compound in, because how will you ever have wealth, right? People are still, even think about it, you're fighting for $15 an hour, but yet you're still compounding out, but not compounding in. You will never obtain wealth. You will never obtain what you desire in life unless you really make a shift. A linear income is not going to give you the ability to compound in, but yet we're still compounding out. So there has to be a shift. And so 10 pips can do you very well when you're compounding. So I don't want you to feel like I can't get 10 pips or I need more than that. You know, you can do 10 pips. And based on your trading style now to that first support and resistance line, it was actually 69, almost 70. I'm gonna go down to 60 because you have what's called a pip reaction time, right? How long it actually takes you to get in the market. Can I go over pivots? If I have time tonight, I do plan on touching it a little bit, but tonight is not about the pivots. So maybe we'll bring them in the next time. No, whatever time frame is an entry candle different on time frames, it just depends. So you're trading on this one. Let me not say it depends. You're trading on this. You're trading on this one. This is what you're trading on. So if I'm trading on this time frame, right? If I'm trading on this time frame, then let's see, I'm trading on this time frame. This would not be my entry point. See, normally what you see when this happens, normally, let me put an arrow right here where this worked out. So let's see if this one's gonna do for us. All right, so here's a good example. See, you see my stochastic began to curve down and I do not have a flat top candle. I have a red candle, but it has a wick at the top. If I waited for this to manifest, this is an hour. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's 12 hours before it manifested. So, you know, you definitely would not have taken that trade. You would have completely missed this trade over here. But yet my confluence says it's coming. So because my confluence said it's coming, right? That time frame confluence said it's coming, then you would have been able to take that trade. So, you know, and when you look at how, that's why it's not about it being set up. You know, that went down about 30 pips almost. So that is not about it being set up. It's really about, if I'm trading on this one, this is where I need all my indicators and everything lined up. So this is the one that it has to be on. The one on a higher time frame, because the lower time frames is where everything manifests from first. The lower time frames is where you begin to see it, right? You see that? Got it? Okay. All right. So now, this is what I want to talk to you guys about. You're very welcome. So now you guys know we've been watching Euro NZD. So what I'm gonna do, well, I already did it, but I'm gonna mark it back up because I want you guys to walk with me. So notice that you get these alerts, okay, that come consistently. And that's why I showed you the power of what this tool is at the beginning, because you get these alerts that come consistently, right? Now, we just trained recently on a 5 minutes, so I'm not gonna focus on that. But what we've been doing and what we've been doing on our profit calls are taking this 5 minute alerts and then looking at the big picture of the market, because I need to know what the big picture of the market is doing and where I'm at, right? That's something that I need to know, something that's really important, that I know what's going on in the market. And so what I'm gonna do tonight is we're gonna unclick these because I don't want those entry triggers. I don't want those little alerts. I want you guys to see, remember we just talked about the news. We just talked about, you know, how the news and the red folders, like when we came over here, we talked about these red folders. I think we're gonna see them maybe if this pulls up. So we talked about these red folders and it should be on the economic calendar, and you know what these red folders do. So we still have tonight where JPY has their monetary policy statement that needs to come out. And you notice that, you know, just a fresh recap, you notice that this actually influenced, right, future changes in monetary policy. So if I just look at this week, you know, just to kind of go back really, really quickly and look at the amount of red folders that we had this week, and you know, it's monetary policy, and we got to see the market react, and you guys made a lot of money off of that. So well, let me say you made a lot of profit. Patience, patience, profit. Fed interest rate decision, you break this down and it really tells you what is going on in the market and how it moves our currency. And so when you understand that, then you bring it back to the charts, and it's not, you don't have, and this is why I want you all to get in the habit of opening these folders. Instead of saying, oh, red folder, I'm gone. These are important. These move money. This is what determines how strong or weak our currency is across the globe. And so Euro NZD triggered, and that's really what made me think about our training here this evening, is when it triggered, you know, I was looking at it and I said, okay, we've been following this. This is the one that we've been looking at. And so I want you to understand the big picture and how these alerts work. All right, that's really the focus of tonight. And if we have to do it tonight and again next week, I don't mind doing it in 2 parts, because it's something I really want you all to understand. You know, we're definitely going to take our time. Currently in Euro AUD profit. Thanks a lot, Ms. Tasha. I learned so much from you. I'm excited. Look at there. So, and you guys, just since you mentioned our profit, you know, you guys should have had a lot of profit from this one this morning. You see, we actually are just about hit take profit 2 on that one. USD has hit take profit 2. GBP USD hit take profit 2, and it's still moving. And I don't think I have that. Euro NZD, we hit all our take profits on this one. We made all our money on this one. That's the same one. I don't think I have that one still up there. So I think I took that one down. So, but yeah, this is why this is important. So, okay, look at all these 777s. Go ahead and drop them. Patience, patience, profit. So I get it. You guys know I love it when you make money. So now, so this trigger, let's drop this trigger on here. Let's analyze this. So, but before I drop the trigger on here, I want you to come to the higher time frame, and you know, just to kind of recap what we've been looking at. Okay. Actually, no, I'm gonna drop it on there first. I'm gonna drop this on here first. You said your first huge profit day. Okay, and you've only been here, what you said, about 2 weeks, right? Congratulations. See what I just tell you guys about 14 to 21 days. Here's the testimony right here, 14 to 21 days. Testimony, been here 2 weeks and had her first huge profit day. Congratulations, congratulations. We celebrate you. We definitely do. So, all right. So now let's go ahead and look at this. Let me put this on here. Let's see. And I'm gonna try to slow it down as much as possible, but I just, you guys know, if you have a question, drop it in the chat. And that's why I said I don't mind doing it in 2 parts. So we can break this down if we need to. So this is where we triggered, okay? I'm gonna go ahead and pause this. And as I pause this, okay, as I pause this, you can see that we're here at the 66200. Now, where are we at? You know, let's make this a little bit wider. I want to make sure all of you all, right? All of you all have it. All of you all can see it, okay? So now, let's look at the big picture of the market. We just triggered for a buy on the hour, all right? We just triggered for a buy on the hour. And so you notice that as I come over to the left, when is the last time we hit this level? All right, so here we are in 21. And the last time we were at this level was January 20. So we've been over 6 months. Anything over 6 months is significant. So here we are at a year. And then before that, it was not an entire year, it's about 6 months. So you see this rejected. So the probability of us coming through here, right? Of course, you want to pay attention to this little zone down here. So we pay attention to that zone and to the left, and that's the last time we were around here. Of course, I can, pay attention to like all the little pieces right there, but look at where we are in the market, okay? This is what we are in the market. This is what it triggered. So you notice that before we had actually taken this trade. Now, as you see, I'm on a daily chart because I'm trying to give you big picture. So before, right, it rejected from here and it pulled back up. We took this up, but yet it has not made a true trend change direction. It has not. This is where it pushed from. So in order for us to have that trend change direction that we're looking for, we have to pass this part right here. You know, we have to pass that part. It's not an option that we don't pass this portion. So knowing that this is where we get, you know, where we will start that trend change, and what I'm trying to, this is big picture, right? It will have to pass that point. It will come back and retest it and then keep going. And then that's when you ultimately had a change. Now, what the Vibrata does, okay? What the Vibrata does is it is going to alert you at those changes. We already saw the 5 minute when we train on a 5 minute. Now, when we're on that 5 minute chart, you're going to see a lot more. On that 5 minute chart, you're going to see quite a bit more. You know, you're going to see quite a bit more, right? You're going to see quite a bit more support and resistance, quite a bit more triggers, because it's a lot more activity that's happening. That's what you're going to see when you're on that lower time frame. All right, that's ultimately what you're definitely going to see. However, on a higher time frame, we don't get as many triggers, but yet, so when you get them on a higher time frame, obviously they're significant, right? They're obviously significant. So as I'm looking here, all right, as you can see this, you see we've been getting a little rejection right here. It hasn't passed through. Now, one thing that you also see is, because we're looking at the hour, so obviously the 4 hour and the daily are important, okay? So my 4 hour is my confluence, but you notice like we're on a 5 minute, the 30 is the confluence, from the 15, the hour is the confluence, but we still go check the higher time frame. Like we still check the hour and the 4 hour to see what the market's doing. So if I'm looking at the hour to trade off of, I need to know what the higher time frames are doing. I need to know what the market is doing on my higher time frames. So this is that big picture. It's been trying to push back up, as we already know, and then they had all the Euro news. However, what I don't like about this is the fact that my stochastic is pointed straight down. However, it's starting to try to pull back up some. So if I look at now, Sundays is going to be a good day. That's the new week. This is, what do I mean by has not passed through? You see that yellow line? It's not pushing through that line. So Sundays are a good day to, but you can see where it's kind of getting rejected here. This is where you get your new week candles from on Sunday nights. That's why a lot of people analyze the charts for the week. And so, or you'll come and you start looking to see what's triggering. You know, think about it. I'm gonna take you guys, how you do one thing is how you do everything, right? So I'm gonna go back to my car. I'm gonna stay on my car and my stop sign. You leave in your neighborhood. In order for me to get out of my neighborhood, I have to pass this stop sign, right? This is a stop sign. In order for me to get out of my neighborhood, I have to pass the stop sign. The reality is you're never going to put your tires in the same spot. Okay, it's just not realistic to believe that you can. But for whatever reason, we keep stopping. We have not accelerated, and we have not gone through this stop sign. We're still sitting at this stop sign. But every time we try, we stop in a different spot. It's like, hey, I'm leaving my neighborhood. Wait, I forgot something at the house. Let me turn back around. Wait, I'm gonna try this again. Wait, let me turn back around. It's something I left something at the house. Let me go? No. So every time I'm stopping in a different spot. I'm stopping in a different spot. So that's what I mean. It keeps getting rejected. It's not passing. It's not passing through. It's not going through. So how you do one thing is how you do everything. So when we think about this and we see this, it's not difficult. It's just different. So we don't want to overcomplicate it, you know, and just approach it. And that's what I meant on last week's call. I might have said it Tuesday too, that we don't want to compartmentalize things, because that is what we do often, is we compartmentalize things. We believe that, you know, this is totally different and it doesn't apply to anything because we've never seen it before, or because we've never worked through it before. So we believe that, you know what, I can't, you know, like this is going to be difficult. It's not difficult. you know? And so sometimes if you take a step back, take a deep breath and understand that the way this market moves, remember, this is people, we're people. People are what's moving this market. We're just not the people moving the market. That makes sense? But people are and people are predictable. How people react is very predictable. And so when you understand that we ride the wave, you notice how when you're around certain people or you're around certain things, you react on that based on the people you're around, because you know how they're going to act. And so what you're doing is paying attention to learn the habits of the market, like you learn the habits of people, because people are what's moving the market. And these decisions, and that's why we went back to these decisions, these types of decisions is what people react to, and that's what moves the market. So I need you guys to really kind of think about it like that, you know, really kind of think about it from that perspective. So now what we need to do is break through here. So it's just triggered, right? It triggered, if I can find it again. So that one triggered for a sell. Anyway, here we go, right here. I'm gonna put it at the top. It triggered for a buy, right? It triggered for a buy. And it triggered for a buy on the 1 hour. So now when I come down here, right, and we see that it triggered for a buy on the 1 hour, the thing is it's already overbought. It's overbought. So let me check my 4 hour, because it's always triggered in correction. So what you're seeing with this one is it's been having a hard time getting through this zone. So it's not one that we're going to touch right now, but in it, you know, I just want to help you understand how you analyze these. So you see it's this where it's wicking out, and once again that stop sign, right? It's wicking out, it's wicking out, it's wicking out. So these stop signs, you want to make sure that you get through all of this before we take a trade. So my 4 hour is definitely in a buy. My 1 hour is always caught in a correction. So the probability of this, the probability that's pulling down is not, I mean, it going through, it's probably going to pull down again before it even attempts that. And then of course, when I look on my daily, you can see that even on my daily, right, each one of these candles is having a hard time. This is a trade where we're kind of waiting on that setup, and patience, patience, profit. Patience, patience, profit. Because let's go back to the top when it turned around, when it came down. All right, let's get up here. And then I'll put the pivots on, and maybe that'll kind of help as well. Now you notice that, let's just start from right here. Now, look at the little zone, you know, let's just start from up here. I'm not even going to go back to here. So if I looked at it from this perspective, from, you know, you see how it's kind of in this little area right here, how it hung out in here before it came down. So how many pips is this? Let's just use it from this zone to this zone, right? Look at how many pips that is. So look at the movement in that. So this was August of 2020 that this started. And so these are the type of moves that you're looking for. So this is what I meant about your style of trading, because what I'm sharing with you last week, what I shared with you last week was more about the 5 minute, let's get in. Some of you guys want to get in and out. Let's use our HFX. What I'm talking about this week is for those of you all who want to be able to just set it and go, right? For those of you all who want to be able to, I have other things to do. Let me learn how to use these alerts, set the trade and go, all right? But yet you have to have some patience in this, because some of you all down here, let me come back to the hour. Remember, we traded this one. We took this together. We took this trade together. Well, we took this. So yes, zones are in between the support and resistance. Absolutely. So that's what I call a zone, right? Some people call it other things, but I always call it a zone. So when you look at it, let me thin these out some. And you look at it and you can see that trading zone to zone. Remember this morning, you know, I was telling you guys that, you know, I've adjusted my trading style. I used to be a scalper. I did. I was a scalper. When I started trading, I was a scalper. And you see that 67, before I really learned, it was like blue clothes. For those of you know, MetaTrader 4, you're blue. is, you know, once you hit the blue, because you're really not understanding the market, you get excited that it's profit and bam, you close the trade. You don't let it play out. It's like you're moving in the blue, blue close, right? You made some money and you really haven't developed that relationship with the market. And then when I started understanding some things and I started to begin to see, then I would let it play out. And I was out 10 pips is I was not taking a trade over 10 pips, you know, 10 pips, but 10 pips will do you well. But as you start developing, you know, but let me go back, because we would take a whole bunch of 10 pip trades, but we weren't compounding at first. And so what we want you guys to do is be able to have that advancement more faster than we did, to be able to reach your goals faster than we did, to where you guys can, and it doesn't have to be quote unquote fast, because you're here for a reason. You're here for that wealth shift. But this is about you being able to understand the market and you being able to develop a relationship with this market. And when you have that relationship and you understand how it moves, it's predictable because people are predictable, right? It's predictable because people are predictable. And so when you really, really grasp that and you understand that, because these are people behind these decisions. And so this is what's really strengthening the currency, right? And so if you look at it, I mean, let me come back to this one. I don't want to mark on that one. So I mean, think about it. And then I'll go back. Let me give you a nugget real quick. So here you have GBP USD, all right? GBP USD. This is GBP in the US dollar, right? We know that there's an exchange that's happening. We don't have to buy British pound and we don't have to buy US dollar and hold it. There's an exchange of currency that's happening. And so this is the base currency. This is the counter currency. This is the base currency. This is the counter currency, right? This is the base currency, that's the counter currency. And so this is the price. This is the actual price, right? This is the actual price. So to buy 1 GBP right this moment, where's my price? It's gonna take, right, to buy 1 GBP is gonna take $1.39 for one. So 100, right? So just think about it. This is real life. This is real money. This is real market. It's moving, right? So this is a real price. This is an exchange. So so whichever one is stronger, right? Whichever one is stronger. Of course, USD is going to be fighting. They want their currency. We want our currency to be stronger. So GBP want their currency to be stronger. So of course they want to keep rising it up, you know, rising the price up. And US dollar wants to get it where it's equal, at least to where, you know, the dollar is stronger. So you got to remember, this is real life. This is real life. And when you understand that this is real life and real situations and real governments and real currency that's moving and flowing, this is why we don't force trades. This is why we don't get that excited, you know, about getting on a call, right? We're past that point where we get on here and it's like, you just get excited over some pip movement. Because once again, I'm gonna tell you in a heartbeat, I'm not here to help you get gas money. You know, y'all can play the lottery for that. I'm not here to help you get gas money. I'm here to put you in a position, be your own bank. You know, we are here literally to put you in a position to where you obtain the wealth that you desire, to where you are literally economically unbothered. That's why we do these calls. That's why we're here, is for you to be in that position. And so it's all about an understanding and understanding that you can definitely, you know, put yourself in that position by understanding what this market is doing. And so now we know that the possibility of this passing through here at this moment, let me get my indicators back. The possibility of this passing through here at this moment is probably not going to happen. We're approaching this overbought, right? Approaching this overbought, okay? So you have to take this into consideration. Now, one thing that we've been using that I love is, and I didn't want to drop them on here too early. I did have another currency to look at. I hope we have enough time to do it. That's why I said we'll do it in 2 parts. Let's put our pivots on here. The pivots are going to help you, all right? Now, these are the pivot points, okay? Now, what the pivots are. So my pivot point is that center point that in the market. Now, these are also support and resistance lines. So let me get a 555 in the chat if you did your homework. Did you go to the harmonic scanner and come back and put your pivot points, your support and resistance on here to really help you begin to identify where your support and resistance lines are? Just let me get a 5 if you did your homework. Now, see, you did not say 0, 0, 0. So I need you guys to do that this weekend. If you did not do it, I have a lot of 5, 5, 5, but I have 1, 0, 0, 0. Okay. But I love the honesty. I love the honesty. So go to the harmonic scanner, and you guys can go back and watch that training. Go to the harmonic scanner, and when you go to the harmonic scanner, then you bring it back to the vibrata and you line those up. You learn how to identify those support and resistance lines. So before I show you the pivots, just real quick, because I saw it help, is come to the line chart. When you come to the line chart, right, you can see, it helps you see it clear because these are just closed. These are the closing price. So you can see them a lot clearer. And what you're looking for is touches, okay? You're just looking for touches. So if I grab my line, right, I'm just looking for touches. You see how I have a touch here, 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 right? You're looking for those touches. And then when I switch it back to my Hikanashi candles, you can kind of see where it falls rather beautifully on your chart. And so what's going to happen is your eyes are going to be able to start seeing it. Like you see how I don't switch to the line chart anymore. That's how I learn them. I learn them on the line chart, but I don't switch anymore because I can see it now. And that's where I want your eyes to get to, is where you can see it. And so, hello, hello, hello. I got a hello in the chat. So you can see it, right? And so understanding that you can see it, and that's just going to really put you in that position to be in a better position to win. And so now let me put my pivots back on here. So when I put my pivots on here, okay? When I put my pivots on here, what I want you to see is right here. You see this pivot point. This is the center point. So the market it's called a pivot point for a reason. Now they are support and resistance lines. That's where they are. That's where they fall, but they're still calculated on events, current events that's happening in the market. So you notice that they change each and every single day. So the center point of the market, so this is where the market is trying to stay drawn to. And so once again, it's an indicator. It's an indicator, right? And so this is, is predicting what based on what happened. The same way the stochastic is a leading indicator. It's an indicator, and it's just really predicting the center point of the market, because you notice none here right now, but there will be some tomorrow. So they will populate some more. And so in my higher time frames, what's typical is that I will stay between this R1 and this S1. So I will stay between this R1 and this S1. And then what, see here, come to my higher time frame, you see we're dead on that pivot area. We really have not deviated. You see it was down and it was up. Now it's in the middle between those. We really have been hanging out in between that area. When I come to my lower time frames, look where my pivot point is, okay? Trust me, these pivot points will help you too. So when I come to my lower time frame, you see my pivot point is below. What did I just tell you? The probability of us really going higher right now for this trade that we've been looking at for a week and a half, right? So the probability of me going higher right now is just not there. And so when you put these pivot points on here, you can get in the habit of doing that, because when you trade certain things like our US 30, or you trade something like Bitcoin, it works on all of it. But let me pull Bitcoin up real quick. Let me just pull that up real quick. All right, so when I'm here on Bitcoin, you notice, and for those of you all, you should have had a 777 on Bitcoin as well, because Bitcoin hit exactly what we said this morning, then it bounced back down. So we should have had, you got to learn how to take your profit and walk away. Learn how to take your profit and walk away. Learn how to take your profit and walk away. All right, so now we're here at the pivot point. All right, don't get greedy. We don't get greedy. It feels real good when you're making some money, but that goes back to that statement that you made, all my trades and in profit. I have an expectation. You guys don't stay at work to get more money, right? How many times you've been like, you know what, I'm going home, I'm going home. And they're like, well, we'll give you X, Y, Z, or they call you in on your day off and you're like, nope, I'm going home. So when you know you need to take your profit, go home. Don't stay at work. Why are you trying to reach R3? No, ma'am. No. So if you don't let them call you into work, then you don't push the market. Same thought process. How you do one thing is how you do everything. So and that's that greed that'll take you to that level where you end up in a hole. We don't want to do that. You want to analyze it, take the trade, and walk away. Analyze it, take the trade, and walk away. And so the reason why I pulled this up is because Bitcoin hit the R1 that we talked about, right? It hit that R1, but the point I'm making is there's no looking left. There's no looking left. And so then something like the pivots become important, because how do you know where the support and resistance lines are going to be? Because there are none. Now you see it's forming them. It's definitely forming them now. So because we get to a certain point and then we pull back. So this is why we've been so successful trading Bitcoin. We understand it, we pay attention, and then, look at this, and it pulled up. So we knew that this was an R1, so we knew we weren't coming past it. What did I tell you guys? So this hit that R1, but then they said it was on another one, I think on a different time frame. I saw it. I'm not really talking about Bitcoin tonight. I was just trying to make a pivot point. So, but it hits those levels and then it pulls back. It'll go up and it'll pull back. So it's creating support and resistance. This will always be a support and resistance. See, it had never been as high before it got there, but now it has some support and resistance lines. Now the market's respecting them. So, but we have to use these pivot points. Get in the habit of using these pivots as well. Analyze it, confirm it with the pivots. Don't trade blindly with the pivots, okay? Don't just take trades blindly because you see some pivots. You see how all of this works together. And this is why we are having the success that we're having. So this is why you're having that success. So because you have developed this relationship with the market. And that's what we analyze in the mornings. We come in and we just show you how to analyze what we're learning tonight. So, but right now, questions, comments, testimonies, questions, comments, testimonies. And no, we are not reaching for that R3. I have absolutely no idea where the countdown timer is. You guys have been asking that all day. But the beautiful thing is technology. And with technology, sometimes those things happen. So I'm not a programmer. I'm a trader. I don't know. But I'm sure it'll be back. So matter of fact, I know it'll be back. Not I'm sure it'll be back. I know it'll be back. It's, but the beautiful thing is we know that each one of these candles, this is 15 minutes. This is 30 minutes. This is an hour. This is 4 hours, right? So we know we can see, this is where, there are certain things that we do. This is where, like, why did I have you start your online trading journal on paper first, right? Why did I have that? Why did we do that first on paper? Why is it that your teacher used to have you do things on paper? Because I know that in 5 minutes, we're going to get a new hour candle. In 5 minutes, we're going to get a new 30-minute candle. In 5 minutes, we're going to get a new 15-minute candle, right? And so it's just a little bit more, so all of that's there. Now, how do I know? Of course, in 5 minutes, we get a new hour, but in 4 hours, right? Now you just get to come right here, and this happened at 1:45. And so what's next is 2 o'clock, and that's UTC time. So we're almost ready. We're almost there for it right there. So no, it should be there. Like it should really be there. So it should really be there. You said click price and click countdown to close. It should be there. It's just a feed issue. It'll come back. It's a feed issue. It'll come back. So this is giving me so much more. Thank you. This is giving me so much more clarity. I was going over support and resistance again and following your teachers on stop limits and loss. And I took a huge, look at you, you took a huge profit in your live account today. Congratulations. You know, I always have time for a testimony. I always have time for a testimony. It's time for a testimony. All right, questions, comments, testimonies. Questions, comments, testimonies. Go ahead, drop it in the chat. We have a few minutes before we transition this call. We're going to transition in a minute, but we have a few minutes before we transition this call. So what I'm going to do next week, all right, what I'm going to, while you type your question out, what I'm going to do next week is I'm going to come back, you know, I'm going to come back and we're going to analyze a few more. So because I don't, you know, this is not going to be a one-time thing. You know, we're going to come back and we're going to analyze a few more because I really want you all to understand the big picture of the market. I really want you all to understand, you know, how to utilize these triggers in the big picture of the market. And when you grasp the big picture of the market, it's going to help you with, you know, the little trades or those tighter entries, because we haven't even talked about how you would get in a trade, right? We didn't even get to that tonight as far as how you would actually get in a trade when that happens. So if we were gonna come back, because right now you definitely see that pullback. You see this? Let me make this point because I want you to see this too. So you notice right here, we just talked about it's not gonna go. I said it was gonna pull back, right? I told you guys it was gonna come back down. That's what, remember I just said that? So now when I come down over here, look at what's happening on my lower time frame. Look at what's happening on my lower time frame. So my lower time frame, you see how my hour and my 4 hours still look like a buy? Because we don't have you cannot see all activity. Remember, it takes 4 hours to make this candle. So you do not see all the activity. But when I drop down every 5 minutes, I see the activity. And so you can see that pullback and you can see what's actually happening right here. And look at all the momentum that we still have on the 15-minute for this to be able to pull back. So when we're on that 15-minute chart, this is why we must use time frame confluence to come to the top and then go to the bottom. Why we must go to the hour and come back to the 5-minute. Why on the hour we need to check our 4 hours in that daily and then come on down and see, you know, the hour is the 4 hour and then go down and see what's happening on the 15, because that will be that entry point, the tighter entry. You know, once we identify that we actually have a trade on a higher time frame, then we use that 15-minute and that 5-minute to actually enter the trade. So we'll definitely come back to this next week. You know, definitely want you guys to grab that big picture and look at a few more. So let me see here. We have about 1 minute. So it says, thank you for answering the caller guide. Gave you to create 1 million BYOB master traders. I claim my spot. Amen. Hallelujah. So congrats. So time frame confluence is set up on the hour. Go back. There's a videos pinned at the top of the Telegram. There's 2 videos pinned at the top of the Telegram. And I need you to begin with that playlist. There's a playlist pin. And so I need you to start with there, and it's really it should give you some clarity. So this is so helpful, big picture. And is the HFX recorded? Yes, it is. There's actually a playlist. There's actually a playlist called BYOB Cash Out HFX Simplified. And so I'm not analyzing right now. It's time to transition. Got to transition this call. So, but you are a master trader. So let me drop the YouTube channel in here. youtube.com/BYOB challenge. You know what? I did not send it to everybody. Let me try this again. And all right. Well, it's time to transition this call. So definitely time to transition this call. And if you don't have a PCR flip, you're not taking it. Same